Welcome back to the channel, everyone. Today I want to talk about how Citadel has run out of cash and is desperate for more. So desperate, in fact, that Ken Griffin has even sold off some of his personal ownership in Citadel to external investors like Sakura Capital. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, first I want to go through this article that's just been released. If you've already read the article, feel free to skip ahead a little bit until I get to the meat and potatoes and talk about how Citadel has run out of money and why they're desperate for more. So the article is titled, Ken Griffin's Citadel Securities receives its first outside investment from Sequoia at a $22 billion valuation. Citadel will receive $1.15 billion in proceeds, valuing the market maker at about $22 billion. And obviously, Citadel Securities is managed separately from the $43 billion hedge fund named Citadel. Now, the first thing that struck me as odd as to why this is even happening is because Ken Griffin has another company, a hedge fund called Citadel Securities, that manages $43 billion. Why couldn't Ken have just taken some of his $43 billion and lent $1.15 billion to Citadel, the market maker? Intergroup loans are absolutely allowed. Even in this instance, where there's a hedge fund and a market maker, the two companies can still lend money between each other. And I think the obvious answer here is because Citadel Securities, the hedge fund, is up to its neck in unrecognised losses, and they don't want to sell off $1.1 billion of their assets to lend to Citadel, the market maker. I imagine if Citadel Securities sell off $1 billion of these assets and recognise some of those losses, they won't be able to meet their margin calls, and that's why they needed external investment to lend to the market maker. And obviously the market maker has created so many synthetic shares, they are also up to their neck in synthetic shares, and they're also sitting on unrecognised losses or massive debt obligations, and also can't meet their margin requirements. Citadel Securities is set to receive its first outside investment ever, with the market maker owned by billionaire Ken Griffin getting capital from Sakura Capital and Paradigm. Now, I think this is a move that just shows how desperate Ken Griffin really is. This is his first ever time taking on external investment. He's managed to keep Citadel, the market maker, and Citadel, the hedge fund, 100% owned, and therefore he gets all of the money. This will be a massive hit to Ken Griffin's ego because now he can't say that he's the 100% owner of Citadel Securities. It's not solely his firm anymore. Yes, Ken has also been paying himself about $1 billion before tax a year for some time now, but at the same time, I'm assuming he spent it all or put all of that money back into Citadel and still needs more. You'd think after the January rally, which led to a surge in business for Citadel, where the company saw its net trading revenue surge to $6.7 billion a year in 2020, which was nearly double its previous highest set in 2018, you'd think after making all of that revenue in 2020, that Citadel wouldn't still be desperate for external investment. But obviously that just goes to show that Citadel, the market maker, and Citadel, the hedge fund, are both desperate for cash. Even though they're making so much money, they're having to use it all to support this massive synthetic short position. Right now, you can currently get a free share of AMC on top of the usual 5 free shares valued up to $3,500 each when you sign up with Moomoo using the link in the description below and make your first deposit. Moomoo are a brilliant commission-free firm that don't make their money from payment for order flow. Moomoo and Futu make their money from margin interest and from payment fees, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to Citadel. Moomoo also have excellent technical indicators and advanced charting tools. They also publish daily short selling volume on top of a number of other important pieces of data. So right now, if you open your Moomoo account and make your first deposit, you get 2 free shares. If you can deposit $100, you also get that free share of AMC. And if you can deposit $2,000, then you also get an additional 3 free shares, bringing the total to 5 free shares valued up to $17,500 and that free share of AMC. Now, I also found this article hilarious because the article even tries to blame Ken Griffin buying the Constitution on his own son. It says, I was sitting at home in New York and my son calls me to say, Dad, you have to buy the Constitution, Griffin said. Now, the thing that I find funny about this is that in an article from 2015, it said that Ken Griffin's 3 children were all under the age of 10, and therefore which 15-year-old, 14-year-old, 13-year-old kid tells his dad to buy a copy of the Constitution? Clearly, this is just another instance of Ken Griffin trying to blame something on other people and not taking the blame himself. But so why is Ken Griffin accepting external investment now of all times? Well, as Immortan GME says, why now? Is it a coincidence? I don't think so. Right now there's a massive amount of open, call and put options on both AMC and GameStop that expire on the 21st of January 2022. Obviously a lot of these are going to be divorced puts that potentially need to be rolled and the can kicked again, or these market makers and hedgies have to buy back all of those failed to delivers. That's obviously a very coincidental timing, and all of these failed to delivers are held by market makers. Citadel is therefore sitting on a huge pile of toxic waste which is about to blow. Obviously tons and tons of these put options are about to expire worthless and expire out of the money, and therefore Citadel has all of these put options that are worthless. And obviously when these expire worthless, that's going to be a massive blow to Citadel's margin capital, and they will fail to meet margin requirements. And that's why they've spent $140 million on GameStop alone in the last 5 days to push the price down. Obviously they're trying to get any of these puts to expire in the money just so that all of them don't expire worthless. And as Rock God said, Citadel announcing this investment is basically them saying, we are proud to announce that we weren't meeting capital requirements and asked our golf buddies to bail us out or else we're going to lose market maker status. And not only that, but Citadel have had to ask their golf buddies to bail them out, or else Citadel is going to be taking down everyone else with them. Now, some of the guys over in the Discord were asking me, Tom, why is Sequoia investing in Citadel? Don't they know that Citadel have massive unrealized losses and massive amounts of synthetic shorts that are about to blow up? Why is Sequoia lending money to Ken and effectively bailing him out? I'm sure you remember what happened to a number of stocks like Viacom CBS when Bill Huang and Kohrs Capital Management went down, losing 20 billion in a matter of a few days. But you also know that Citadel leverages its portfolio, that 43 billion portfolio, at a ratio of around 7 to 8 to 1. Basically meaning that Citadel doesn't just have $20 billion to lose, they don't just have $43 billion to lose, they actually have around $250 billion worth of assets that could be lost if Citadel gets liquidated. So imagine what happened to the stocks that Bill Huang and Kohrs Capital Management was holding, and then imagine that amplified by about 12.5 times. And this is why Ken's golf buddies had to bail him out, because obviously if Ken and Citadel go down, well, there's going to be a large portion of the market that goes down with him. But so who is Sakura Capital, and why are they pouring money into Citadel other than to save their own arses? Robinhood actually received investment from Ribbit Capital and several other venture capital firms, including Sakura Capital, Index Ventures and Iconic Capital as well. And therefore, not only does Sakura Capital now have their finger in Citadel's pie, but they also already had their finger in Robinhood's pie. And on top of that, Sakura was also an early investor in Melvin Capital as well. And therefore, Sakura basically has all of their fingers in all of these pies, and are basically the glue holding everything together. Sakura was an early investor in Melvin Capital, they were an early investor in Robinhood. Obviously we know that Citadel works very closely with Robinhood and also previously bailed out Melvin Capital, but now it's Citadel that are needing the bailout. Robinhood obviously can't lend that money, Melvin Capital obviously also can't lend that money, so who's there to glue everything back together? Well, it's Sakura. Sakura actually have about a $400 million investment in Robinhood, and they know that if Citadel goes down, then Robinhood goes down as well, and therefore Sakura will be staring down the barrel of a $400 million loss. Now, from a quick look at Sakura's 13F filing, it doesn't look like they have a current GameStop or AMC short position, but I do think they're somehow affiliated. because back in January 2021, Sakura Capital actually denied pressuring Robinhood to stop GameStop trading and turn off the buy button after a viral Reddit post. Rumours that Sequoia had pressured Robinhood into barring some transactions came from a Thursday post on Reddit from an alleged employee at Robinhood. The post alleged that Robinhood founder Vladimir Tenev had received calls from Sakura Capital and the White House that pressured them into closing trading on certain stocks. And here's the actual tweet from Sequoia back in January of 2021, assuring us that they did not pressure Robinhood to turn off the buy button. Maybe we've almost been going after the wrong fund and the wrong market maker all this time, and actually it's Sakura Capital that pressured Robinhood to turn off the buy button. Now, so why is Ken Griffin doing pretty much anything he can to get any form of cash into Citadel? Obviously, it's because he's desperate for cash and he's willing to do anything it takes to survive just another day. I wanted to show you this video of Ken Griffin talking about how he survived 2008, where he was losing hundreds of millions of dollars each week, and everything he did was to buy them just one more day. And as this poster says, I believe this is exactly what they're doing again right now. That's why he's accepting external investment for the first time ever in his career, which is going to be a massive ego knock for him. And it's because he just wants to survive one more day.
And not foreseeing the financial crisis of 2008 was the greatest mistake of my career. You see, we are paid to see the unforeseen. And I did not grasp the magnitude and depth of the financial crisis that was growing in our banking system. A crisis so large that virtually every bank in America would have failed if the government had not intervened. Every bank would have failed. And after Lehman failed, we found ourselves fighting for our very survival. We were caught in the maelstrom. We were losing hundreds of millions of dollars a week, if not more. CNBC parked a van in front of Citadel, waiting to break the story of our demise. But we weren't going to give them that story. You see, each day, we took the steps needed to keep our business going. We sold assets. We closed business lines. We let people go. We suspended redemptions. Our management team absorbed $500 million of costs on behalf of our investors to demonstrate our commitment to the business and our belief in the future. And each thing we did bought us one more day. And day by day, we bought ourselves a future. Often the choice was between painful and more painful. But the one thing we didn't do was put things off. By the end of 2008, we had lost half our capital. But we were still in business. And we kept our team. And our team kept fighting to buy us another day. You see, with the right people, with the ability to execute, and with the willingness to make the tough decisions, we were able to save our firm.
So just comparing that to what's happening right now, Ken Griffin and Citadel have obviously suspended redemptions again, as it now takes around 16 quarters for Citadel investors to withdraw their money. I assume they're also making people work overtime and potentially letting people go if they can't afford to pay them. They're also probably selling off assets. And now Ken Griffin has resorted to doing something that he didn't even do in 2008, which is take on external investment. Back in 2008, Ken didn't take any government loans and didn't sell off any of his shareholdings. So for him to do that right now, he must be very desperate. So guys, be sure to let me know down in the comments below what you think about Ken Griffin and Citadel running out of cash and how they are absolutely desperate. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.